Hi, and welcome to another episode of Startup Strides. Today, my guest is Alena Redeker. She's the principal at Auxxo, where she invests in ambitious female founded startups across Europe at the pre-seed seed stages, which we'll dive into soon. But before that, welcome, Alena.
Thank you for having me. Super happy to be here.
I'm very excited. Been a long day. I am tired, but good conversations energize me. So I'm very excited for our conversation. I guess before, I have some questions, obviously, about your investment philosophy and more follow-ups on that too. But before that, I want to ask you about your way into venture. How did you find yourself in the VC world?
Yeah, I think it's not the most traditional way I ventured into it, or especially into the business world. So I grew up in Berlin and I have a super creative family. So they're all artists, really working what they're super passionate about. And so this is how my family came to Berlin in the first place, discovering Berlin as an artistic place. And then I studied business just because I also wanted to keep my options open, actually. And then I eventually ended up doing consulting and doing M&A for startups. This is kind of how I got into the whole startup ecosystem, and I kind of felt the urge to dive deeper into this. I was also in an early stage B2B SaaS startup in Berlin, and that after they raised their pre-seed round and kind of seeing a startup from the inside. And while actually being abroad, studying for my finance master, I did a lot of research on the gender funding gap, because throughout my whole kind of steps in finance master and also in consulting and in early stage startup, I realized that there's actually like a lack of females around me. And I was quite shocked to see that when going to a really innovative field such as startups, it didn't change much. So I did a lot of research on that gender funding gap, which I'm sure we will dive into in more detail later on as well. And at the same time, I was working for this couple. They were both entrepreneurs. They were really lucky and I think also really talented in selling their startups and building great companies. So I actually managed a bit of their angel investments and also VC investments. So 5 years ago, they invested into the first Auxxo female catalyst fund that was being set up at that time. So I was actually sitting on the LP side doing the LP onboarding, talking to the two GPs of Auxxo. And I was so impressed also and like relieved to see that there's now a fund being set up in Germany, and as the first European gender lens fund. So kind of exactly the solution to the funding gap that I've seen in my research. So there was a match made in heaven, I would say, and I was lucky enough to get the possibility to then join Auxxo a year later, and I think it was September 22, so nearly 4 years ago now.
Wow. So you started on the LP side before moving to the
Good.
investment
Yes,
side.
yes.
So you've seen both sides of the table, which is a very interesting perspective to have. That's really
Yes.
cool. And maybe you can actually give me a kind of an answer on that. Like, what are now that you've seen, I think very few people manage to see both sides of the table. What are some noticeable differences in how, I guess, GPs or investors, look for LPs and pitch to LPs versus what are the LP expectations typically?
Yeah, I think it's interesting because I mean, of course, I've only seen this one side of like kind of how entrepreneurs that kind of reinvest into the ecosystem that also kind of made money with building startups and behave. And also, I think it's worth noting that was 21 times, so it's a different different aspect now. But I do see that a lot of people that start companies and that manage to liquidate their shares or like kind of sell their companies, they want to reinvest into the ecosystem. So that's when they look for, hey, how can I bring in my knowledge, everything that I've learned, and maybe they started out with angel investments and soon realized that managing a portfolio of angel companies is actually quite a lot if you have some other full-time obligations, and also you need to like see the fund model. We invest in a lot of different companies. We can diversify our risks, and if you're an angel investor, you oftentimes don't have the just sheer capital to invest in so many companies and also like manage all of those investments. So I think a lot of people that started out doing angel investments then tend to do some LP investments as well. So this is like the angle that we had at that point also, and also just really backing on the mission of funding female founders. So I think especially when pitching as an GP or just generally a fund to LPs, it's important to know what's their rationale behind doing an investment, right? So it's similar to also how VCs have their thesis. Oftentimes it's people you pitch to, if you're not talking to big institutional funds, and we did that as well, but more on that kind of high net worth individual side, it's really about understanding if they're value aligned, what they actually want from an LP investment, and then kind of tailoring to that.
It's really cool. I guess before we move on to more a generalized kind of focus of our conversation, which is very interesting, I want to start by asking a question, because you've been in the space for some time now and mostly focus on pre-seed and seed stage investments, which means you're often committing before there's much to analyze in terms of revenue, product. Sometimes it's just an idea and the team, right? Um, what are you actually evaluating at that stage? Besides, I mean, the typical answer is obviously the founders, right? But I guess besides the founders and besides like the market, or maybe you can go give me a bit more details in terms of what you look at with founders and the market. What are you evaluating, and what's the conviction? What's that feeling of conviction looks like for you?
Yeah, I think it's always the question at early stage. Also, a lot of the times, right? Is it the jockey, the how do you call it, the horse or the jockey,
Jockey, or
right?
jockey,
Yeah.
yeah, jockey.
So kind of like the horse as the market and the problem that they're building in, and the jockey as the founder who is of course steering what they're doing. And I think I can get excited about either. So oftentimes it's the founder that's just so impressive, and you just want to work with them. You feel like they're exactly the right founders to build for this kind of business. But then, of course, pivots happen every now and then. And oftentimes it's also like people saying, hey, we just bet on this founder and it doesn't matter what they build, it's just going to be amazing. So I think this can be one angle of looking at it. And then another angle where I oftentimes get super excited if I realize, hey, this is a big problem and we've been flagged this from like corporates or enterprises we talk to, or our LPs who also maybe sometimes are kind of in the field out there. So really, if you feel like it's a problem and that I haven't seen solved yet, and I also haven't seen 10 pitches in that same field, that's also when I think the excitement can spark. And the conviction in the early days, I think it's really hard and it's really case by case dependent. Sometimes you do not have customers, but you have potential customers that you can speak to that can then validate the problem. And from the founder background, you can see that they've kind of built something in a similar space before, or they've been so good at sales, so they can definitely sell that. So it's a nuance, I think, of different things coming together, but we oftentimes really look for that strong founder market fit. So actually, in the past couple of months, we've done, or like years, we've actually done a lot of deep tech investments. So a lot more looking at deep science that then brings defensibility and founders who have just like the best knowledge in that field. So when I look at the profile and then what they build, I'm like, oh great, you're like
Mm.
made for this. From I don't know, we've one founder in space. She's been to space university back from uni, and her childhood she's always been obsessed with space. So that's kind of like, yeah, you're exactly the right one for this company. So I think it's a mix of founder and market, definitely, for sure. But we love the deeply rooted science topics recently.
The one you were mentioning, right, is it BioOrbit?
Yes.
Nice, nice, really cool. Do you think in the AI age, founder market fit is more important than product market fit?
It's a good question. I think the founder market fit, if the founder deeply understands the market and has unfair access to the customers, you can always navigate a bit of the product around. And I think one really interesting example on this is Resolution, where we've backed 100% the founder, but also the idea she had, because it was just so imminent to what she could build, because she has like, so what Resolution does is they when we invested in their pre-seed round, they actually started out with a conflict resolution platform for B2B conflicts. And it was a bit of a controversial investment at that time, because we talked to some TD experts, people who are like the top notch in negotiation and human conflicts. They were like, no, you cannot automate this. You cannot use an AI platform. Sometimes humans just want to, I don't know, have a chat to a human and say like, hey, I'm here. So actually a lot of people said like, no, it's not possible. And she has negotiated so many conflicts over her whole career. She's been in the government. She's just like the person when it comes to it. And so she was able to replicate her knowledge or build models around that. So that's when we figured out like, you are just the perfect founder for this topic. And we definitely bet on her, but also of course the topic and how relevant it is, because companies spend around 1% of their revenue on conflict resolution, which I didn't know at that time. So it's as I said, a bit of a combination of both, definitely, for sure.
So essentially, if you have the right founder market the right product market fit will emerge eventually. Um,
Yes.
I guess a quick follow up to that, though. Speaking of automation, everything's being automated. Do you think there's something that cannot be automated?
I think especially the human context. And also, I think when you get to enterprise sales, at least where we are today, if you spend so much money on buying solutions, you still want to talk to a human. You want to have that level of trust. You want to have this level of support. And I think actually from a time where we always said like we don't want to invest in kind of service businesses, I think big funds like I think Andreessen Horowitz and the likes are now publishing blog posts about like, hey, we actually do want to invest in these outcome businesses and service businesses again, because now as software is becoming so much more of a commodity in a way, we want to buy the outcomes as well. So I think the service part is becoming more and more a topic, and I think the relationships is something that you cannot not automate. But of course, you can get super efficient operationally, and I think this is where you actually have a disadvantage if you're not.
Yes, SaaS is being rebranded as service as a software instead of software as a service. That is very true. And speaking of your portfolio, you mentioned, we mentioned BioOrbit, you mentioned Resolution. I think Emidat is also part of your portfolio. Delta Labs, if I'm not mistaken, as well. Quite diverse, very different topics, very different domains.
Mhm.
Um, I know. I mean, obviously, at that stage, you're evaluating the founder, you're looking at their background, their idea. But when you're investing across so many different domains, and sometimes deep tech requires quite a bit of technical understanding of is this idea viable? Not just technically, but also commercially, but also is it technically viable, or is it just a science fiction? Like, what's your approach to that? Especially because it's not like you've been, let's say, focused on just quantum investments
Mhm,
or
mhm.
robotics investments. You're investing across. So how do you, I guess, stay up to date? How do you dive into these topics? How do you i- have enough kind of knowledge to build the conviction to invest in the company?
Yeah, I think it's always this question, right? If you're a generalist, you kind of have a bit of knowledge of a lot of different things, but you're not an expert in one. But I think this is also where our co-investment approach comes in. We maybe worth noting we don't lead investments, so we only co-invest, which means we oftentimes partner up with lead investors who have a lot more experience in the field. So this is one point. And then also the second point is our network. So of course, I actually recently looked at a quantum deal. I'm like, we have no deep expertise in this field. So let us ask the people that actually do. So this is where we leverage our LP network, where we have a lot of different expertise all across the board. This is where we leverage our co-investor network and so on. So I think this is also the take that we always go with when we do an investment. So we try to find the person that knows the best about the space. And that's also like how we can do all of these different investments, because we think we want to invest in the strongest female founders out there, no matter in what area they are. Of course, Fund One had a lot of B2B SaaS investments. Now we're a bit more on deep tech. I think it's also with market dynamics that change in market trends and pulls. We go with that, but that's kind of the take that we stand with. And also, I think we always tell the founders as well: let us find someone that's really has the expertise in this field to co-invest or lead the round.
Besides the presence of a female founder, is there other connecting theme between the investments you're making?
I think it's a dedication to building something big. It's like the founders that have so much conviction about the problem and about the solution that they are offering that they are so obsessed with this. So for example, I think because you've mentioned some of them, like for example Delta Labs, in one of our recent investments, the two founders who have PhDs in the field, they've bootstrapped actually until we've invested, and they've just shown that they're so good at execution and building a product that the customers love, that we build so much conviction on them. And oftentimes those founders are super humble because they just want to show what they work and not be super loud up front. So, and I think all of the companies that I personally was involved with, the founders have a link to what they're building. So they, as coming back to what I said before, I don't want to repeat myself too much, but it's when you figure out that founders don't just want to start a company because they want to be a founder, and this seems to be the trend right now, but it's because they see that there's a problem that's worth solving, and that's also worth building a big company with, right? Because as a VC, you don't want a founder to sell if someone is offered like a 10 million check for the whole company, but you want them to just keep building because they could not imagine doing something else, because this is so important to them that they just want to keep building and kind of growing a really big company.
Fair enough. Um, Another question I have, I'm coming up with questions on the spot as you're speaking because you're making some interesting points. Do you think like the era of generalist funds, right? And we see a lot of specialist funds emerging too, focused on certain verticals, focused on deep tech only, etc. Um, and we still obviously have generalist funds, but do you think as we are moving forward, do you think generalist funds are here to stay, or do you think we'll see more specialization, more vertical focuses to stand out, to generate those venture scale returns?
It's a good question. I probably also don't know the exact answer to it. What I can say from what I've experienced, also from like shareholder compositions and rounds that are coming together with different investors, I would say the mix is so valuable because I mean, across building companies, it's always so valuable having like founders that turn investors, or also investors who've just seen a lot to share their knowledge and help build a company. Because I think no matter what vertical you're in, companies go through similar pain points and also similar stages. And it's always a roller coaster. And I think having a generalist fund who's just seen across all of the boards what has worked also in hiring and building a brand, like there are so many aspects I think that you can take like universal for all of it. But I think the beauty comes when you have maybe a generalist fund and then, as I said, a specialist fund, because of course for deep tech you have fully different development cycles. You have a different way of commercialization versus a software play, and but I think the cards are shuffled or reshuffled again right now, anyways, with AI and funds just changing their thesis. So I think generalist funds will definitely stay because I think it's good to have that broad overview and also yeah just have the knowledge and also like all the past years of investing. I think that definitely is beneficial. But having verticalized funds, for example, there are some funds that are like just a bit smaller, but then specialized on one vertical, and they have LPs in that sector, so they can make introductions to customers, for example, or really just know. Like, I mean, if, for example, supply chain, if you have a supply chain focused fund, you maybe know all the different chambers of supply chain in different countries. You can make the introductions that are relevant for this industry. And I think for some verticals, that's probably more relevant than for others. But also energy, for example, there's a lot of funds focused on energy companies or energy investments, and they have their LPs and they have introductions to customers. So I think that's when it's super relevant just to get those industry contacts.
Hey, this is I'm diverging so much because you're saying so many interesting things. Um, okay, very quick question: if a junior VC wants to start in now, right, like wants to break into the VC world, they're not a quantum physics PhD from Cambridge University, but they're interested in deep tech investments. Do you think they should try to focus on something? Do you think what's a good way right now to build that resume to break into the VC world?
So you mean if someone already has a PhD in quantum, so is it
No,
an ex? No,
it's the
I
exact
don't.
opposite of it. Like they
Okay.
don't have it. They want to break into VC world. They're interested in this, deep tech stuff. Maybe. Do you think they need to find something to focus on, or do you think there's some other ways to, break into this generalist funds?
I think to start, it's maybe actually not that bad to start as a generalist, because I think you can always specialize after one point. So and I mean, there's always this discussion, right? When are you the best investor? Is it if you've started a company before, if you've been an operator yourself, or if you've just kind of learned over years of recognizing patterns and seeing what can go right and wrong? So I think that kind of not touching on like what is the best way to do something before VC, but rather coming to a question on like generalist versus specialized. I think it's so much about your interest, because I mean, what I do day to day is just looking at founders pitching ideas, and I need to get excited about it and I need to dive deep into these topics. And if you say you're super excited about deep tech and or robotics or space or something, then of course it makes sense to go into a fund that looks at those topics all the time, because otherwise imagine that you are at a generalist fund that does consumer and also a lot
Yeah.
of AI and software, then you're a lot of the times you're saying like, hey, this is nothing I get excited about. So you pass on deals that maybe are a good investment, but just not for you. So I think it is definitely relevant to understand what you yourself are excited about. But of course, I do believe that maybe it's good to have a layer on like seeing what's out there and then kind of going with those. And I think even generalist funds, right? They change over time. As I said, there was a time where in Berlin, especially like how Berlin startup ecosystem got really famous or like got its name, was a lot about e-commerce. It was like fintech and consumer, and then it changed so much. So and now we're in this new era of Berlin wanting to really be there, and also all of AI and building European companies. So I think go with what you love most, because if you do what you love, I think you're the best at the job.
My final question on this topic. Um, you see so many founders and you evaluate so many pitches, and you said you the focus has become more of a deep tech lately as well. The thing with VC in general, but also I feel like AI has changed the calculus a bit too. The timelines have kind of increased, and also the before you see any kind of material gains, it can take some time, right? Um, how do you manage to stay excited and enthusiastic every day doing this job when the time horizon is not, your input doesn't necessarily give you the output instantly,
You're getting to the core of what gets a lot of VCs kind of contemplating what they're in the job for. No, but I think it's definitely true. Of course, VC is especially early stage venture is an area where your feedback cycles are so long. You don't know if you're a great investor until like a few years later, and even then, there's so many different factors coming into play that you have no influence on. So I think it's a core thing that you just need to accept if you're in venture, and that will take time. I think what I continuously get excited about is so many different things. It's new investments, of course, that you see and you're like, oh my God, I'm at this like core of where innovation happens at the frontier, and you just hear about new ideas every single day. And so it feels like you're really at the pulse of everything. So that's like, of course, where excitement comes. And then with the investments that we do, of course, you have follow-on rounds that happen that don't bring liquidity to the fund, but of course show that they're developing and they're doing good, and just being with the founders and helping them on different things, such as getting customers, having a strategy on the next fundraising round, discussing brand, like all of these different things. It brings a lot of joy to me personally, because it's just really cool to work with these founders, and you have so many ambitious people. And I think this is always a blessing about this job in general, that you work with people who love their job. I never talk to someone that is like, oh, I don't like this. I think I quit tomorrow. I mean, it does happen with founders that, of course, there's days where it's harder than others. But generally speaking, you have people that are just so passionate. And I think this energy brings the excitement also day to day.
Mm. Now we're coming to the core of our conversation finally. Sorry, it took me a while, but one of the things Auxxo is focused on is getting rid of that kind of the gender funding gap. And other funding female founders is obviously it's a moral issue, but it's also an economic one, right? Creates a bit of a market efficiency, and usually market inefficiencies tend to get arbitraged. Uh, but it seems like there's been rise in the female focused funds, and also the narrative has shifted too a bit. So I'm curious, why do you think that gap, especially in the startup space, haven't really meaningfully closed, and what's still keeping the capital away?
Well, if I would know the answer to this exactly, I think that we would be a lot further with the funding gap in general. But I think, well, so initially Auxxo started with exactly that thesis, right? We need to bridge this gap, and we want to fund these great female co-founded teams. And as I said, I've done a lot of research on the gender funding gap and kind of the underlying reasons to why this gap exists. And I think it has so many different angles to it. For example, biases. And this is also actually how Auxxo was set up. We all have similarity bias, and the two GPs, they were angel investors before. And they have done a lot of angel investments, and a lot of them had a female co-founder. And that's not what you can see in the market. So you can see the networks are more female, therefore the deal flow also gets more female. And this also brings me to the second point. We need more female investors. A lot of the assets under management are still managed by men. So that means the decisions that are made are oftentimes driven by male investors, also male LPs. This is another topic. So I think this whole shift of where capital is located needs to happen for more women founders to be funded. And I think this takes time also. So that's the second part. And then of course I think also what needs to happen is a change in how we bring, or like how we raise kids and how we teach kids in school, and how we like have gender stereotypes, right? And I think there's a lot that comes to it, but I think we need more role models as well, and we need these female founders to raise big rounds and to go and sell their companies for other founders to be, or women especially, to be encouraged, and also have like dare to build companies and also dare to dream big, because I think a lot of the times women are brought up with this narrative of like, be careful, don't like kind of overestimate yourself, rather surprise positively, don't like oversell. And I think this narrative needs to change, and that also takes time, but we're working on it, and I think it and hopefully in a couple of years this would change. But yeah, we just need to encourage people to be a bit more brave in that space, I would say.
So it's not just founders. We also need more female investors. We also need more female LPs too.
Yes.
Um, that's interesting. Are you seeing more female LPs coming into space, or?
So, well, in our LP base, we're lucky to have 50% female LPs, not the assets, like kind of not the overall sum, but like the amount of women that invested. And I think a lot of the times, even in marriage, the men were still the one managing the finances, even though the women were the ones spending the money oftentimes and making the household decisions, and where the money was spent. So we're trying to get more women there. And also I think what a core of what we wanted to do with Auxxo is funding these entrepreneurs that hopefully at one day then have big exits and then distribute their money back to the ecosystem. So also, I mean, in our society, I think with money also comes power, and we need more power to be in women hands, I think, as well. So it's all a circle that we're working on to
Yeah.
kind of reshift that.
When investors evaluate, obviously, I'm asking in general, but when investors evaluate team where there's a female CEO with a male co-founder versus just all female founding team, do you see any meaningful differences?
I think the honest answer is I would need more data, like because we invested in 40 companies, or with the angel investments, it's been 50 now that have a female co-founder, and we would need definitely more data to evaluate exactly how follow-on investors judge all female teams versus mixed gender teams. But we, of course, do see differences in how females versus male pitch, and how they present, and that kind of then like affects the way that VCs interact. But I couldn't say per se that it's a difference. I think
Mm,
with we recently like made some investments in female only teams, and oftentimes they then need to even show those sometimes male attributes on like pitching the startup, selling big,
mm,
being really bold a bit more, versus when there's a man that kind of can take that part. But I don't want to overgeneralize as well, because I think, as I said, I would need a lot more data to make a clear kind of assumption on how they're treated.
So when like female founders pitch and they start, I guess, utilizing certain techniques where as you said, are more like, traditionally associated with more male kind of, approaches, features. Do you think that reinforces that dynamic or is it, kind of, do you think it kind of removes the point of, having kind of separate
Yeah.
approaches?
Well, when I was doing the research, there was papers that showed that those attributes, like similar attributes, they were associated really positively with male entrepreneurs and not that positively with female entrepreneurs. So I think a lot of founders sometimes then tend to take up these, or like the females tend to take up these male attributes, but I think they're not evaluated exactly the same on females as in males. And I would wish that female founders would just like, and it's also, I sometimes feel a bit stupid saying like female founders, male founders, because like gender sometimes is just one measure, and like it
Yeah.
can be this
Yeah.
way or
Yeah.
that
Yeah.
way. I think a great founder, either gender, will definitely receive VC funding because they just know what they're talking about and they know how to pitch. And I think it's a lot more about knowing the VC language, knowing what to say, and knowing how to present the company, less than it is about gender itself. But of course, I mean, I think you also know, I think we talked about this before, right? This prevention-based versus promotion-based
Yeah.
question. I did read those papers as well, and it's a bit shocking to see that a pitch presented by a female versus male it's judged so differently. But I do see that women just tend to rather be a bit more humble. And when you have the same pitch of a man and you kind of, we see that's talking to more male entrepreneurs, you're maybe more used to this like overselling part where you actually need to kind of cut down a bit. And for the female pitch, that's a bit more humble. You actually need to kind of just shift it up a bit. And I think if you're used to this up here, then this seems like, oh, they're not ambitious enough. They maybe don't have the vision for it. Whereas actually they can be talking about the same thing, just presenting it a bit different, if that makes sense.
No, it does make sense. Going back to your point about the questions founders get asked about the kind of prevention questions versus the promotion questions towards me, do you think that's still being played out more and more? Or I guess, is this still very much actively being played out? And do you see that female investors doing the same, or is it just very much unique to male investors?
I think as an investor, you're so trained to recognize patterns in a way. And because I mean, also just by the sheer number, right? Like if we screen, like let's say, like I think we now have around 7,000 companies that we screened and we've done 40 investments across 2 funds. So you can just see how many we say no to. So the default is saying no, right? So that's just like something that's in the nature of the job. And we try to spot patterns on why this could be an outlier really early on. And if you don't stand out, then of course, in the sheer amount of companies you see, you fall behind. And I think that's also something that's female versus male investors. Of course, it can happen to all of them, that they maybe don't uptick the the pitch. I say like this from females, but what we do see is that a lot of the times, recently we had this example. We were speaking to them and we saw their potential right away. We were like, hey, this is so cool what you're doing. And they also maybe pitch a bit of a different way if they pitch to us, because we oftentimes say upfront, hey, this is like a really safe space and we get to the core of it right away. And it's not so, I would say the conversations are quite deep immediately because we also show ourselves quite open and like share some personal information, not because we want to manipulate, but just because we're
Yeah.
quite authentic, I would say,
Yeah.
especially as a fund. So that, of course, leads to then more authentic conversations where the females oftentimes feel like they don't need to put up this, like, hey, we
Mm.
like behave like male founders, maybe if that's what it is.
Yeah.
Coming back to the point, we recently had a company where the founders were just like so great because they've showed in their past steps that they've just always been outliers in what they've done, but they didn't really put it up front because there was just not their personality to brag. But of
Mm.
course, in this world where you want to spot that someone is an outlier in what they're doing, you need to tell the other person that there's points where you can see that. So I think it's oftentimes more about helping the founders to actually bring what they already have inside to to the person they pitch to. So really making sure to outline that and not just say like, oh, of course we can do this and of course I've done this before, but really like, yeah, just
Mm.
presenting it different.
Fair enough. This might be a bit of a difficult question to answer. I'm not asking about your personal experience. I'm just more curious. I think there was recently a VC horror story about how the cybersecurity startup was passed on because the investor was like didn't believe that a female founder could lead a cybersecurity startup. But it's that's usually people don't answer it that openly, right? They give a different
Mhm.
answer, different reason why they're rejecting. What are some typical rejections have you heard in the space when at the core it was a more kind of gender related rejection, but obviously it wasn't being pointed out that way?
Yeah, well, I have an example. I'm thinking about how I can say it so that some people don't know what I'm talking about. There was a team recently when we've actually gotten like the feedback of other investors because we were like super convinced of the team. We've talked to references, customers, potential customers. We did references on the founders, and they were all saying like they are so great at what they're doing, and they've been in environments where they were employed, and they just were kind of always going up and beyond, and they were like we couldn't keep them because they just wanted to go higher and faster and bigger. And oftentimes they're quite humble, and that's what's misinterpreted with like maybe they're not ambitious enough. And I think this is when gender really comes in, or where people there was a funny comment on saying like, hey, this founder seems like she's already well off, kind of coming from like a nice background. Why would she have the ambition to build something big? Whereas we're saying like, I think you wouldn't say this to a male founder that maybe is wearing a nice watch or something, that they're not ambitious to build a big thing. And I think you would probably say like, oh, he has to prove something or something like this. So that's where we definitely see that we don't see the grit, we don't see that they're ambitious
Mm,
enough, maybe they're not building the biggest thing. It's a bit of a hint towards gender when we actually have proof points from their CV or what they've done in the past that actually they definitely have huge ambitions. So
mm,
that humbleness, and maybe it's also a bit of like a topic that's more related to women and upbringings, and as I said before,
mm,
that we need to look at a bit more closely. And I think that's a big part of, I mean, if you're a gender lens fund such as us, we can look at female co-founded teams only. So we can cut through all of the noise. And I always say it's a bit of a sourcing edge actually in a superpower because unfortunately there's not that many female co-founded companies out there, so that we can look at the ones that are out there quite in detail, and the ones we think have potential, we try to place them also with other funds and say like, hey, you really need to look at this. They're so great. And then oftentimes we can open up the door for funds to speak to them when actually maybe they have been overlooked because they don't speak the VC language, because maybe they were a bit too humble, or all of the other reasons that might be out there.
mm. Yeah, I mean, it's not really possible to do it anonymously, right? Like you're doing clinical trials where you just, there's essentially blind trials, right? You don't exactly know, but you can do that because you have to talk to founders, you have to get their backstory. But I'm sure there's so many great ideas and great startups that when it comes to that double standards in perception of certain traits and qualities, they get
Mhm,
either passed on or not invested in, which is very, very interesting. I guess let me just now take it opposite turn and play a bit of devil's
okay.
advocate here, right?
Mhm,
Um, some might argue that that might create a bit of a signal and risk in being backed by, let's say, female focused funds that once they have to raise later on funds, follow on rounds, some investors might look at it and saying, okay, the investment was they raised capital more because of the identity rather than the quality,
mhm,
right? Um, one, have you seen that play out? Have you seen founders trying to like have to prove their way out of that kind of
mhm,
perception, and particularly in follow-on rounds? And two, I guess what's your approach to, I guess, reducing the risk of that
mhm.
happening?
I think it's funny that you say that because actually we've seen the opposite.
Oh,
Unfortunately, now that we as Auxxo have, or like luckily for us, but also it kind of brings that signaling risk, that we've built a brand and a reputation, especially in Germany, as a female co-founder, like a fund focused on female co-founded companies. The founders that, like the teams that have a female co-founder that don't get funded by us now have a bit of this like negative signal, or said that it has been laid out as a, oh, if Auxxo is not investing, like if they are not investing, why? Kind of.
yeah.
Which we of course also don't want, because I mean there's so many great founders, and it can be have so many different reasons like portfolio conflict, or we just don't focus on the space right now, or it's too early or too late or so on. So not just because we didn't invest, it doesn't mean it's not a great company, of course. Just want to put that out there. But I think this is also one of the reasons why we do co-investments, because we want to build this bridge, because we don't want to be the only ones investing in those companies, because then we don't change the industry or the standard, right? And we don't narrow that gap. We want to build the bridge, and we want to co-invest alongside other funds that maybe also have bigger pockets that can write bigger follow-on tickets. And also because of our network and because of the standpoint that we have now, we can make the introductions to follow-on investors. So this happened quite often that we've actually done the intro to the follow-on investors, because we know exactly who would be a fit for this company, because we've known the company for a while, and we know the thesis of the investors, so we can kind of be the matchmaker there. So for the companies that we've invested in, I actually have never seen it play out that someone is like, oh, this was a female focused fund that invested, and it's like therefore not worthy to be invested by another fund, but rather like the opposite, because we partner up with other funds, and then they have another fund in the cap table as well. And that's also, I think, really the reason why we've done this. Of course, I mean, if we, and like there's Fund F in Austria, Sister Fund in France, there's a lot of gender funds. If only all of us would invest, maybe someone would be like, okay, like
Yeah.
maybe we need an industry focused fund or a bigger fund. But yeah, no, I actually haven't seen that be a factor.
Funny enough, you were saying the opposite played playing out, which I guess if that teaches anything is that there's no way to escape bias in
Yeah.
any way. It will always somehow emerge. And when it comes to choosing your co-investors, I think a lot of VCs have their own kind of personalities, their kind of philosophies. What's your approach in terms of when it comes to co-investing? Like, is there a specific profile of VCs you like to co-invest with, or is it like, do you have any takes on that?
Actually, we per se said, no, we don't want to just have a list of co-investors that we want to invest in, but we want to be really collaborative with everyone
Mm,
that's out there. And what we do oftentimes do is that we sit down with the founders if we've built conviction based on our experts and our due diligence, that we said, okay, these are the funds that we think this could be super beneficial for. And actually part of our LP base is some of the GPs of other funds or like fund of funds. So we
mm,
have some of the other funds that have invested in our fund, therefore they get deal flow and we can spare with them as well. This is how initially in the first fund, we also wanted to have the backing of the industry to kind of show that we're there not to take away ownership, but rather just to complement others in the cap table. So we try to just find the investors that fit best for the company, because one fund can be amazing for one company, but for another one, it's just not a fit at all. So I think it's then oftentimes just trying to figure out, hey, what's missing, maybe also in terms of capabilities or resources or knowledge in the team or the current shareholder circle, and like what can we like find additionally in another fund. So we have a huge list of potential co and follow on investors that we like to just go through with our companies.
really cool. And in terms of, I guess coming now to the point of like fundraising for the fund itself, um, that at that point you in a way become an entrepreneur, become a founder who has to pitch, who has to kind of find investors to invest in your fund. And there's been a, fund two's first close was larger than fund one's. And I think EIF joined as the institutional investor as well. Um, I'm curious what changed between those two rounds and what LPs I guess noticed.
Yeah, I think it's a lot has changed, and it's really what you say, like opening a fund or being emerging managers such as Gesa and Tina were when they were starting with Auxxo, is like being an entrepreneur, right? And I always say this oftentimes when I speak to startups, it's like our fund is a bit like startup inside of a fund, because we have had to build out the brand. We are really operational in the fund itself. We do events. We try to shape up the thesis. We try to get better every day, and we learn also all the time. A lot has changed also from the market dynamics and the environment, right? So when we started with Fund One in 2021, actually the fundraising was super short. I mean, I said initially I was on the LP side, and they were also allocating to a lot of funds, because at that time the startup ecosystem seemed like there was a lot of money
Boom.
going in, but
Yeah,
also
yeah.
coming back. So that was actually really easy, and I think pitching Fund One is a bit like a pre-seed startup, I would say. If you're a great team and you have a great story and a great product and in the market, I think a lot of people would be interested. But then when you get to Fund Two, of course, you need to show some performance on Fund One. And I think raising Fund Two and also Fund Three is super hard, because in our case, especially Fund One was in 21 vintage, high valuation, fully different market dynamics. So of course, like the DPI, like the money you get back from the investments you've made takes time, and it's not there when you raise Fund Two or Fund Three oftentimes. So it's really about convincing the people again about the story, and from Fund One it was a lot of high net worth individuals, and now Fund Two we have, as you said, the European Investment Fund as our anchor, as a big institutional fund. We have more family offices. We have some CVCs that have invested. So of course, you try to look for a bit bigger tickets than just these small, like kind of more high net worth individual tickets that can bring up a smaller fund. But then when you get bigger, you of course need bigger tickets as well. So that has changed, and then of course also the market has changed, and a bit also our brand, but of course as well. So we can also show now that we get into the best deals with a female co-founder, that we know our target group, that we are invited in by founders, but also invited in by follow on or co-investors. So that's the pitch has changed, of course, a bit, but it's not that easy. Fundraising in the current environment, I think, as a lot of fellow funds will agree on. But yeah, just doubling down on what we really believe in the market and kind of the thesis, I think, is what then convinces the LPs.
Mm. The LPs also, I mean, from what I've seen, seem to like this differentiated thesis, but also they do like that conventional track records. They like familiar networks too. So how do you balance those two things? And where do LPs like to seeing the differentiation, and where do they look for something that's reassuringly familiar?
Mhm. I think it really depends also on each of the LPs, right? As I said before, everyone has their different take on why they do an LP ticket. Some want their network, they want to feel like they belong to a community. I mean, we do a lot of events, this can be an angle. Others want the deal flow because maybe they're a later stage fund investing in similar fields as we do. Others just want to get experience and exposure to startup investments. It's like the area is really like so diverse on like kind of the reason why people invest in funds. And also I think this is why it's so difficult to say per se. But I think VCs really value kind of this also GP market fit in a way. So for us, of course, like we invest in female co-founded teams. We've built up a lot of female networks. Gesa and Tine were female angels that showed their angel track record. So that of course helps if you have a track record of investments to show, but also really that we know our target group fully, that we know that we speak their language. We are where the female founders are. We've built those networks. So that helps. And I think it's similar to if a fund does deep tech investments, of course, it's super helpful if they have a strong network in those areas to the universities, the PhD candidates, if they have like kind of LPs in that network. So I think having that verticalized focus, of course, helps. So having some edge, but generalist funds, of course, they then have that track record, and then it's also different sums. We're talking about like the assets under management and fund sizes that those bigger funds raise. I don't know if that answered your question fully, but maybe
No, no,
the
it definitely answers. And I guess now that you mentioned, assets under management, I feel like it would be a good segue, good follow up into my next question, which is like, there's VC landscape has changed. Obviously, there's one proliferation of VC funds, and also there's a lot of more micro VC funds as well, which I'm curious to hear your take on. And also, I guess the second part of that question would be like, how do you stand out? I see pre-seed rounds that are 6 million. I see seed rounds that are sometimes 1 billion. The mass has changed, and how do you generate returns from that? So, how do you win if you have, let's say, if you're a starting fund, if you're a micro fund, you don't have a lot of, funds on there. Like, how do you win in this day and age?
so many questions in one. Yeah, it's I think it's a difficult question to really say how you win. I think it's in the end, VC is oftentimes such a herd behavior. Like everyone thinks sometimes the same. And I think that's where actually funds that have their own thesis that they stick to and are rigid on like, hey, this is for example, round sizes we go with because that's the math makes sense for those like returns we can receive. But then of course, like bigger funds can play some certain bets that are in huge pre-seed rounds, which we can't. And I think like what I can only say what our take is, and I also don't know if that's the one that wins, but it's kind of our approach to it is really being like so diligent on like building a fund model and understanding like if we invest in, let's say we will invest in around 30 companies in pre-seed and seed stage. If we deploy this ticket and we get this initial ownership and then there's rounds that will happen and what kind of exit scenarios can be, what will this mean in terms of returns? And then understanding like, hey, is each of the portfolio companies that we're evaluating a candidate that can receive those returns? And I think especially in a small fund and that invests super early, of course, we have the possibility to get a secondary or kind of get out a bit earlier when there's a huge round that
Mhm.
happens and already kind of taking some money off the table. If you're a huge fund, I don't know, 400 million fund, then you of course need to have that huge exit as well. But you of course have different ownership targets as well. So you hold a lot more of the company also at the time of the exit than we do because we just go in with smaller tickets, but also of course smaller ownership. So I can't say what makes the fund win, but I think just being diligent on kind of the thesis and just knowing what you want, and sometimes also not getting crazy about what everyone else does.
Mm,
And it's a lot of micro funds that are doing a really great job and just doing their deals, having the network. I think having a network to access is huge point of this. And then of course picking the right deals. But I mean there's always this discussion, right? If early stage venture is more of an art or a science, and I don't know. There's so much to look at, and I think only time will tell. And there's so many great funds out there as well. But I do agree that I think there will be also funds that struggle to fundraise for then the following funds. So I can imagine that the number of funds will also decrease, and maybe more micro GP funds will emerge. Also now that AI will enable smaller teams to do more just by using AI for sourcing, evaluating, messaging, and so on. So I think there's a lot more of AI native funds that are just managed by one or two partners right now, or solo GP funds as well.
So in a way, actually being a smaller fund can be strengths, especially because when you consider things like secondaries as an exit option. And also, but when you think of a good micro fund, in your opinion, it's the ones that kind of doesn't really try to ride different hype cycles, but more like sticks to its thesis, sticks to its focus, and doubles down on it, and that kind of pays back. Essentially, what I'm getting from your answer is that a right
Yeah.
assessment?
Yeah, I would say as well. I mean, there's different ways on going on about this,
Mm,
right? I think some microfunds, they just know exactly what they're doing. They're saying, "Hey, I'm just doing, I don't know, robotics or supply chain or something because I know exactly how the playbook works." But then it can also be a discussion on like, "Hey, are we taking enough risk in in European VC, German VC especially?" But really, I think the smaller funds that are there for the founders and they really just provide value are the ones that will get into the best deals, and then that kind of loops around.
mm,
But yeah, it's tough to say who will win in this game. But I think especially nowadays also that brand and like kind of social media presence and so on can be a driving factor on who will be in your cap table, because having a big brand and network can also have a positive signal on the investments you do, because you just get reach. So I think that's a whole another topic that we could probably do a whole episode about how this is becoming a trend now. People we see being big on Twitter and Instagram and TikTok and so on.
I feel like I have a feeling we'll have another episode together, Elena, and have a because I'm really enjoying our conversation. Um, we are coming towards the end of our episode, unfortunately. I've been really enjoying talking to you. I guess two more questions, right? One of them is obviously your portfolio spans health tech, legal tech, I think environmental tech, fintech, quite a bit of stuff, right?
Mhm.
And now, in recent times, you mentioned deep tech is kind of one of the newer focus areas. But I guess
Mhm.
in terms of specifics, are there certain areas that you're becoming more and more excited about, and are there certain areas you're becoming a bit more cautious about?
Yeah. So I think I really am loving space tech. I think this is also, of course, a trend, and space and defense is also closely correlated. And we are definitely cannot do any defense investments, also just based on our limited partner advisory or like the LPA that we have. So we're just not allowed to do that. And we also it's another whole topic. So space, I think, is something that I'm quite excited about, just because it's so at the frontier, and it's just the infrastructure is there, and we're at a time now when you can actually do things that you couldn't do a couple of years ago. So that becomes more real in a sense, and not so really science fiction. So that's one. But I actually also, it's maybe a bit of a controversial one. I don't know. It's consumer. I think consumer has a bit of a comeback. I think a lot of VCs have backed consumer startups a while ago. Then there was like kind of this trend of no consumer investments
Yeah.
being done. But there's different just mathematics around it as well, right? There's different multiples that are being paid, but also maybe different funding that's needed. And in times where we're in a bit more uncertainty, it is just shown that, I don't know if you know this lipstick effect, that in times when there's crisis, women, or like general, like you like to treat yourself to small things, so that
Mm,
lipstick actually went up because you can't maybe afford a house or a big car or something, so
yeah.
you treat yourself with little things. And I think this is also going more towards the area of fitness, health, longevity. So I think this is also something where we will see a lot more happening, and where we've made some investments as well, and topics that just give the consumer more data on maybe their bodies, like Aura, right? Aura is also a
Mm.
company that has recently become super successful. So I think consumers also maybe a bit of a contradictory one to the really deep tech topics that I like. And what I'm cautious about, I mean, software is changing, and I think I'm more cautious about these general AI applications where you feel like with the next launch of cloud features, this will just wipe up a whole
Wipeout, yeah.
amount of startups. And also when it feels more like feature and not like a big company. So I think those topics we're really looking at defensibility, and I think on some of the software cases, it's unfortunately now with the development of AI and how easy it is to start building, the defensibility is a big factor that we look at.
No, I said I have one more question, but I lied. I have another question that just came to my mind is that VCs are always excited, about many different things. And um, they're obviously more excited about being right, but being wrong is also sometimes very exciting because, some cool technologies come out of it. But is there anything you are scared of, like in this very, very AI driven age? Is there anything that worries you where AI has kind of overtaken every segment, every sector, and
Mhm.
and, and that seems to be the new norm?
I think we all don't know what the future will look like. I think what worries me, but at the same time gives me a lot of hope, is kind of where the geopolitical standpoint stand. And I think betting on Europe and really doubling down on Europe and having a lot of hope that we now are waking up and we're building kind of this case for sovereignty. I think there's so many discussions around it recently, and I think this is also where I would worry if we don't wake up, if we don't step front and kind of speed up the process of innovation. I mean, we have so many topics around regulation in different countries, and sometimes this can feel quite slow, I think, for startups and can lower the growth, and that's why a lot of startups then go to the US. So that's something where I have hope and worry at the same time. And of course, the development in AI can sometimes worry you, where you feel like, okay, where is this actually getting to when we reach AGI and so on? But I think there's so many positives, and I think I'm per se a quite optimistic person. So I try to look at the bright side of those things, and especially in healthcare, for example, that it brings so much opportunity as well.
Yeah, yeah. Now my final question, which is
Yeah.
the ideal outcome of the ideal outcome of a thesis treatment fund is often that the market failure it targets eventually disappears, right?
Mhm.
Especially in the ones that's so, I guess, the thesis that you guys have, that the ideal goal is that it eventually disappears. So if the gender funding gap meaningfully closes eventually, what should Auxxo become? And how would you know that the original mission has actually been successful?
Yeah, it's a good question. I think the ideal endpoint would be if female founder wouldn't be needed, right? If we say founder and it's male
Mm,
as female alike, and then we are just a great fund investing in the best founders out there, and we maybe have a different approach, and by then maybe we have seen over funds that we've raised that we're really good in one area, right? Maybe we'll become a more of a thesis driven fund. Maybe we'll focus, because we do that a lot right now as well with our founders. We focus a lot on providing a safe space. We focus a lot on founder health, because it's a roller coaster. And I think I initially underestimated as well as how important it is just to have someone that's there that listens and that doesn't just push on, hey, we need to go faster and bigger in revenue, because a lot of the time the founders know that they should, like, if they don't reach their target revenues, of course they know it's not the best thing, but then like understanding like, hey, what actually is underneath that as a human, right? Like what drives them, what can we do to bring them to the best possible version of themselves, because founders are similar to athletes. Maybe there would be then more on that aspect of a fund. But yeah, I think how we would see that the fund succeeded is that if you look at a generalist fund, the portfolio would maybe be 50-50. 40-50, I would
mm.
also really be quite happy with. So just more money in female hands, more female investors in decision-making power, more female co-funded deals across all of the different fund portfolios. I think this is where we would know that we have succeeded. And of course, like a lot of unicorn companies in our portfolio.
Fair, obviously, every VC's dream. Alena, it was a wonderful discussion. I learned a lot from you, so I very much appreciate your time, and I hope you enjoyed our conversation too.
Yes, it was super, super nice. Thank you so much for having me on. And of course, always happy to chat with all of the great entrepreneurs out there, females and males alike, and also people that want to break into VC, because I think it can be quite a scary jump into the industry, or it can seem like it's quite exclusive. So I'm always open for chats.
Wonderful, Alena. Have a great evening.
You too. Thank you.